All right. Good afternoon, everyone. I am Joy Bailey. I am a loan officer here in Charlotte, and I am licensed in 13 states. And this is not my normal time that I do go live, but I thought this would be a lot easier than recording something, having to edit, and so on and so forth. So, today, I wanted to hop on because there was an article that came out in the news yesterday regarding Navy Federal. Navy Federal is being, I don't want to say accused, but Navy Federal has been cited in not treating all of its applicants fairly in terms of their outcome of them applying for a home loan and actually being able to be approved. Okay. And so before I go more in depth, I want to make sure that you understand, one, why am I talking about this? And two, what makes me qualified to discuss this? Because I'm going to have a disclaimer on here that if you are not someone that has an open mind and you're not someone that doesn't see the world through just one lens of racism, this is not going to be for you. This is going to be a much higher level conversation than you are probably used to on YouTube videos. I'm pretty silly. I'm a funny person. I like to have a good time, but I do think that there is room in this conversation to introduce a new element of discussion to articles that are there to race bait you, because the news has a job to do, and their job is to make sure that they have ratings to be able to satisfy advertisers. And this was an article or a news story that a lot of people, particularly in this high interest rate environment, took notice of. Okay, so they did their job. So my job as a YouTube personality, as a mortgage loan officer, as a Black female, as a African American homeowner that has gone through foreclosures, a singular foreclosure. I think that I am able to bring a unique perspective to this conversation. And so I was over on TikTok, and I made the statements that I'm going to make to you in my positioning, and it was met with a lot of pushback. Somebody called me a pick me, and whatever, and I'm okay with that. But it's, again, if you are a serious potential home buyer, and or if you are someone that likes to have more of an intellectual dialogue and conversation, this is going to be for you. So let me share this because I really need to establish who I am. Because again, it's going to share the stage. It's going to shed light on some of the reasons why I think some of the things that I think, and it offers credibility, because unfortunately right now we have a lot of people on social media that offer a lot of pontificating on a lot of different things, and they just do not have the credentials to do so. And so I've been a mortgage lender for 9 years. I have worked for banks, which is very important in this conversation because Navy Federal is a bank. I have also worked for non-banks, like the company that I currently work for now. And I have been in lending for 9 years, so I have seen the market do multiple things. So along the way, when I started, when I was at a bank in 2019, I started to get this accredited mortgage professional designation that you see here that was issued by the Mortgage Bankers Association. And it is something that typically you don't see loan officers have. A lot of times you'll see higher level executives will have it, and it leads into something called a CMB, which is a certified mortgage banker designation. I don't have the goal right now to engage in that pathway, but here is what it says based on the 90 classroom hours of experience that I had to go through, and I had to work with my colleagues as a part of this program to manage a mortgage company for, I think it was 8 quarters. I learned a lot. And so my skill set includes advanced portfolio management, advanced production management, business forecasting, fraud detection, which is something we're going to talk about, loan product design, market risk pricing strategies. Those are the ones that I think that are really, really important, as well as secondary markets. I share this with you simply because I want you to understand whatever it is that I am telling you, I'm not just pulling it out my ass. I am very well read and very well researched before I engage in any type of public opinion. And so I certainly hope that if you have a differing opinion, you can respect where my opinion is based in, which is based in fact and based in research and not opinion or based in feeling. Okay. So now that we got that out the way, hey y'all, hey. So one of the things, let's see who I got here. So look, oh my gosh, how are you doing? I have to come check your channel out. I ain't really been on YouTube in a minute. I don't know. Kind of been over in the TikTok space, loving it. The people over there, they're like blowing my mind. Like, I just love the conversation that we're having. So if you're not on TikTok, you might want to get on TikTok and do some live streams over there. But I hope everything is going well for you. But yes, I want to start with a little bit of background. So just in case you are completely unaware of how this got started, let's begin at the beginning. So there was an article that came out, but I'm not going to share the article. I would rather share the share the video with you. And it's about 4 minutes, but it's going to give you the context so that you understand what the news is saying. And we're going to add the information that I have to this to flush it out for you. Because what I'm about to reveal to you is an element or multiple elements and dimensions to the underwriting process and to the credit risk process that you do not know anything about. I know that when people apply for a loan, they have this imagery of somebody with a file, like a manila. I wish I had one, like some sort of manila file folder, opening it up, blowing off the dust with their ink pen, and they start writing little notes. And then they put out the thing and stamp it, approved or denied. And it is so much more complex than that. I mean, it is layers and layers and layers of things and barriers or processes, and quality controls and things that are in place to be able to practically eliminate any one individual's opinion of an applicant. And that's very important to understand. So let's start here. I don't want to hold y'all too long because, you know, it's the middle of the day, but I just, again, thought this information would be better shared in this format than it would be otherwise, like with me recording, because ain't no way I was going to record this and then end up having to edit it too. Oh, no, baby. Okay. Why can't I? Okay.
Being followed.
Oh, really?
I want to play this.
Oh.
I want to go introduce myself.
Oh.
Nice. Why wouldn't I be nice?
I didn't know it was going to do that.
But it really is a nice neighborhood, you know.
Baba Tandi, a Kenyan immigrant turned Texas entrepreneur, knew this was his dream home the moment he saw it. It's in a highly sought-after school district that his son so desperately wanted to attend for its basketball program.
So how many homes did you look at before you found this one and said this was it?
We had about 6, but this was the one that we all wanted. And we were all praying to get this one.
Otandi's first choice for his mortgage was Navy Federal Credit Union. It services military members, defense personnel, veterans, and their families, and is the largest credit union in the country.
I was the CEO of my company, so I had a pretty good income.
Your credit was in the 700s. You'd recently sold your house. You had $100,000 for the down payment, which was more than 20%.
Correct. I mean, what more could you ask for?
CNN reviewed Otandi's financial documents. He even had a pre-approval letter from Navy Federal in hand. But just 2 weeks before closing,
I got a denial. They sent me a letter saying, "We're sorry, but your application has been denied."
Were you stunned, surprised?
I mean, I was stunned. I was shocked. I was hurt.
the denial letter listed excessive obligations in relation to income as the reason.
When they denied is when we came back and said, oh man, there's something else going on.
And what did you think that something else was?
Discrimination.
But it wasn't just Otandi. Thousands of other Black applicants were also rejected. According to a CNN analysis of federal consumer protection data, last year, Navy Federal Credit Union only approved 48%. That's less than half of its Black applicants for conventional home mortgages. White borrowers were approved more than 75% of the time. It's the biggest gap among the top 50 lenders. The data also shows Navy Federal was more than twice as likely to deny Black mortgage applicants than white ones, even when different variables, including income, debt, property value, and down payment percentage, were the same.
I feel validated at one point, but also I feel a bit of anger because it shouldn't be happening.
2 weeks after Navy Federal rejected him, another bank approved Otandi for a mortgage. Navy Federal Credit Union denied CNN's request for an on-camera interview. In a statement, it said it is committed to equal and equitable lending practices, and that CNN's recent analysis does not account for major criteria required by any financial institution to approve a mortgage loan. That includes credit scores, which are not public. Navy Federal declined to provide additional data. We asked Navy Federal why Bob Otandi's loan was denied, but they declined to comment, citing member privacy. CNN's analysis does not prove discrimination, but it does show dramatic racial disparities in who Navy Federal rejects and approves for conventional mortgage loans.
The Black-white homeownership gap and the Latino-white homeownership gap today are both wider than they were in 1968 when we passed the Federal Fair Housing Act.
Lisa Rice has spent decades as a fair housing advocate. She says the disparities in Navy Federal's lending data are alarming and an extreme example of a bigger problem.
It's definitely a larger systemic issue. And we know that we have a long history of redlining and a long history of lending discrimination in this nation. Well, all of that data that is sort of tainted with bias is being used to develop the credit scoring systems.
We got the house, thank God, and we moved on. But what about the ones who are denied? What about the ones who now can't get their own dream house? It's something that's going to affect the generation all the way down to their kids.
Well, the Consumer Financial Protection Bureau, which oversees consumer lending, says that they do not comment on specific institutions, but they do conduct their own investigations to ensure that banks and credit unions are following fair lending practices. Jake.
All right. So there you have it. That is the story. That's the background, and that sets up what we're going to unpack a little bit of today. Now, I don't know, and I want y'all, please converse with me. I want to know more and more. I want to know your opinions about what it is that you just saw, please, because I want to engage in a conversation, because there's so much you have no knowledge of, and you're not supposed to know. I ain't gonna say it's none of your business, but when I say none of your business, I mean like business in terms of like industry, right? So there are things and processes, like I said, and things that we have that you all just do not know about, and it's okay. But I want to try to shed just a little bit of light on that for you today, okay? You are not too old for TikTok. You're not. It's I saw a lady over there. She got almost 100,000 followers, and that lady's like almost 60 years old, giving mortgage information. AI is going to make digital redlining worse. So the thing is, when it well, no, I'm not going to get that far. So, all right. So, Navy Federal is a bank. Navy Federal is not physically in Charlotte. I don't know if Navy Federal, I'm pretty sure they have they do have locations, but we don't have any in Charlotte. So Navy Federal is not on my radar. They've never been on my radar. We have Bank of America, Wells Fargo. We just got Chase like in the last 5 years. We just got USAA like in the last 5 years. So I don't know anything. I don't know very much about them. However, this past summer, Navy Federal was really in my face much more than I wanted it to be, because they were the subject of a lot of financial gurus sharing alternative pathways to financing for credit cards, for automobiles, things of that nature. JT, Jason Thornton on Pocket Watching with JT. I don't know if you all subscribe to his channel, but he is freaking amazing. Okay. He has guests on, what is it? Common Sense with Eli comes on. And those two gentlemen are absolutely just, IQs are just out of this world. The information is top tier. They're very well read, very well researched, and everything that they say is rooted in fact, and I love it. But they gotta get a little spicy for, YouTube. You gotta have a little controversy, a little conflict over here on YouTube. And so they were really very frustrated with the African American community being intentionally targeted and taken advantage of by other Black content creators that found a pathway to, unfortunately, I don't want to say expose, but really take advantage of people's weak-minded thinking and beliefs that there was another way, an easier way to be able to obtain credit cards, things like that. It's literally like they were presented with, like the public was presented with two options. Option A, hey, here's the right way to do things. Option B, here's all the wrong ways to do it. And it's a 50-50 shot that you could get caught. Now it's funny because this is not my my analogy. I was talking to an old manager that I used to have, and this is what he said. He's like, it's like a 50-50 shot. And the people are like, okay, well, I'm gonna try this wrong way first. Like, and that's exactly what happened. And so here's a clip. Again, in case you're not familiar with Pocket Watching with JT, I pulled this from his Instagram last night, and it just, again, it outlines exactly what they were over there talking about. So hopefully it's a play right away.
And it's an extension of the podcast. It's pretty much like on steroids. With Navy Federal, a lot of times they tell us that you can't get a Navy Federal unless you're a member of the armed services or you come from your father was, right?
So let me stop real quick here. This gentleman, I think his name is Him 500. I don't know his real name in real life, but he was a major source for content on JT's channel this past summer. And a lot of JT's work actually helped lead to what happened with DJ Envy being caught up in that whole real estate fraud situation. Now, Him 500 went on the Earn Your Leisure podcast, not in this particular episode that they're highlighting here, but in previous or a post episode where, from my understanding, they paid money to be able to get onto the platform to tell people about all of these different unique ways that they could be able to obtain credit. Even if they had bad credit, no credit, slow credit, no problem, he was going to be the solution for the people, right? And one of the things that JT often talks about is a lot of times when you hear people use certain language like generational wealth and talk about running the play and here's the play and getting position, they're very frustrated with the level of street talk that people are combining with talking about something very serious, such as homeownership, credit, investments, things of that nature. And so one of the major plays that they talked about that got Navy Federal on my radar was this particular gentleman here in the blue went on the podcast and he stated, and I'm stating this very loosely, but he said, hey, all you got to do is go to Navy Federal with a VIN number from a car. Tell them that you want to buy a car. They're going to cut you a check. Then don't go buy the car. And then after however many days, it'll go from being an auto loan to being a personal loan. And it's completely okay. And what he was helping people do was commit fraud. Okay. So there was lots of plays, or there was lots of strategy around how someone would be able to commit wire fraud or bank fraud, which, spoiler alert, is very illegal. It's not something that anybody would advise, which is, again, why I shared the credentials that I shared with you in the beginning of this, because if I get on here and I tell you something like that, I'm being all types of trouble. I ain't gonna have no job. I'm going to be excommunicated from the industry. I'm not allowed to get up here and be dishonest with you. You may not like the position. You may not like the advice because it's not sexy, but it's solid, concrete, and rooted in data. So let's continue.
Short method to get in Navy Federal was this. You can literally call Navy Federal and tell them, hey, listen, my grandfather was in the military. He passed away. I don't have any of his information. And when they come back, what they'll do is actually let you in. Did you know you could get inside?
So a credit union is membership only, and that goes for state credit unions or pretty much any kind of credit union. Some of the criteria to get in is kind of loose, but in this case, there were a lot of people that was like, hey, all you got to do is, and they were giving like the access codes and all other things, so how you could get these accounts so that you will be able to take advantage of some of the discounted rates and incentives and products that these credit unions offer. So off the gate, half the people that's caught up in this ain't even supposed to be a part of their credit union.
Be federal without actually being in the Army or Navy. Say that your grandfather was in the Army, even though that they wasn't.
Execute the pledge, man. We at Navy Federal right now, man. We're gonna execute the pledge. We don't got no excuses. We're gonna run the play. It's snowing right now.
They got Navy Federal. Tap your ass in, man. Anybody with a Navy Federal, get in my DM right motherfucker now. What you waiting for? I made a band in my own.
Don't you listen to these.
Okay, we can go play that because it get a little. So, all right. So in this situation, or in this play that was being run, JT had iterated over and over and over again, like, please stop listening to these gurus. Stop listening to these people that are leading you down a pathway of destruction. So if you were to go on YouTube at any given moment right now, you will see dozens of different videos that people have produced and shared over the last couple of years. And my time frame that I'm highlighting is from 2020 until present. There were lots of creators that took advantage of the extra money that was out here with PPP and all of the other incentive, or was it stimulus? And they were telling people, hey, all you got to do is you can get rich by Friday. Just, buy my course, whoop de whoop, rah, rah, rah. And so now here we are. I want y'all to know that these people got dozens, hundreds, thousands, hundreds of thousands, even into the millions of views. So we're not saying this is a small sliver of the population that was exposed to this. There was a lot of people that were aware of this. One thing I want to make sure that you all understand is, if y'all think that the feds, the CFPB, Navy Federal don't have access to the internet, it's the same internet at their house that is at your house. That's how the internet works. If you think that they're not in these different Facebook groups, they can see. They're gathering data, okay? And as they're gathering data, it takes time. Anytime you look at any type of statistics, it's usually going to be at least a quarter behind or probably even an entire calendar year behind, just because you have to use the entire calendar year, and then it's going to take time to disseminate the data, reconcile it, and create the story behind the data. Because somebody just put some numbers in front of you, you don't know what the numbers mean. So I remember back in 2021, there was it 2021? 2022, the beginning of 2022. I was helping some loan applicants go through loan applications and good credit, decent down payment. And I remember I was like, why can I not get an approval? What is going on? Okay. Well, what was happening was the data from dozens, hundreds, thousands, millions of loan applications had started to notice patterns. And those patterns were that people were getting their credit washed. Now, credit washing is a practice where there are some of these, again, YouTube gurus that will say, hey, pay me this insane amount of money and I will fix your credit. Ladies and gentlemen, there is no magic wand and no magic fairy dust that anybody has that can transform you into being a completely different person on paper without lying about who you are. And I say this because this young lady was arrested earlier this year. And what happens with credit washing is that the laws are a little bit different when you claim that you've had identity theft. Laws have become more lenient because they want to be on the side of the consumer. They want to be on the side of the victim. Why would a victim have to sit sidelined with credit for 30, 60, 90 days while everybody figured it out? That doesn't seem very fair. Well, because the laws got a little bit more lenient and certain things like credit reports or whatever didn't have to, the police reports necessarily didn't have to be shown, they took advantage of it. And by taking advantage of it, they said, hey, this person has been a victim of identity theft. And so you've been a victim of identity theft. We're just gonna, we got 2-3 days. I forgot the window of time, but it's significantly shorter period of time. Because again, they got the victim in mind and they want the victim to be able to get back to their life. And so they're like, okay, well, if they don't respond in like 2 days, 3 days, or whatever the days is, because I don't know, then they have to delete the item. So now you say, oh, hey, I've been a victim. Okay, delete. So now you got somebody that has a 780 FICO score with 6 months of credit history. You got one trade line, 6 months of credit history, and your FICO score is in the high 700s. That's weird, but okay. We see those not Joy, but the system picks up on those types of patterns, okay? And when those types of patterns are established, the automated underwriting system, which I'm going to share with you now, will pick up on those patterns, and Fannie Mae and Freddie Mac, who are the two major investors when it comes to mortgage lending, they change their algorithms to weed stuff out, okay? So please hear me when I say this. I want you to have an open mind. If you have made your mind up that it's racist, that's fine. I'm not here to change your mind. I just want you to consider all of the elements as to when you see these type of headlines, why these headlines exist. How do these headlines come about? And you will have a higher level of knowledge to be able to think all the way through it. So I'm gonna pick on somebody. Mr. CKB, how you doing, babe? They definitely not accessible in Navy Federal. I don't think they're in all states physically. I don't even know where they're headquartered. I don't know nothing about Navy Federal like that. But I'm gonna pick on Mr. CKB. So what happens is whenever someone applies for a home loan, it's usually in an electronic format, obviously for safety and security reasons. which again, everything that I'm telling you is not anything that an individual bank or individual lender can create, a system that they can create or a protocol they can create. There are regulatory bodies that say, hey, you got to do things this way so we can all be in compliance, okay? And so he completes the loan application. He submits the loan application. He gives me permission, either written or verbal, to pull his credit. I click the button. I pull the credit. I look at the credit score. Okay, let's figure this out. If it's below 700, it's probably going to be best that this person goes FHA. If it's above that, it may be best that they go conventional. This is something that's going to be very specific to the borrower, okay? So the man was complaining that, well, the whole study or the whole report was only about conventional loans. It didn't say anything about VA. It didn't say anything about FHA. I also want y'all to understand Navy Federal is very, very popular amongst the veterans community. A lot of veterans go there to get their VA loans. And while I have the opportunity to say this, if you are a veteran, I hate to break it to you, but all of these like different banks, and I don't want to like call nobody out, but anything that suggests that they are connected to the VA, they're not. They're not able to do anything more than I would be able to do because we have guidelines. These guidelines are Googleable. You could go on Google and type in VA loan guidelines, and there's going to be like this 1,100 page document PDF that will come up, and you can read it if you want to. You probably don't know what the words will mean, but it's okay. But it is Googleable. Same with FHA, same with Fannie, same with Freddie, same with everybody. You could Google all of the guidelines. Lenders have to follow whatever the guidelines say whenever we're getting ready to approve somebody. So in Mr. CKB situation, we're going to pretend that Mr. CKB had a 660 FICO score. And I talked to Mr. CKB and I'm going through, okay, so you got a 660 FICO score. Okay, you don't have no foreclosures, no bankruptcies. Oh, are you a first-time buyer? Go through the whole thing. I will start to put the loan together, loan amount, down payment. Do you got money? How much money do you have left over after you pay your down payment and your closing costs? All these elements. And then when we get to the end of the application and he's pleased with the way that the loan has been structured, I have to do something called running it through the automated underwriting system. This is the part, if y'all don't hear nothing else that I say, I want you to hear this. No one individual person is approving or denying the loan except the underwriter. And the underwriter can only approve or deny the loan based upon the guidelines and what the automated underwriting system says that they can do. It is 100% based on the data that you, as an applicant, put on the loan application. If you indicate on the loan application, now the loan application includes your, obviously like your name, any AKAs that you have. It includes your addresses for the last 2 years. Okay, are you stable in your housing? We even ask, are you renting on or do you not make a payment? Okay, imagine if you somebody and you ain't ever made a housing payment or a rent payment before. Your application is now completely different than somebody that on its face you think is exactly like you, and they're not, because maybe they've been paying rent since they've been 19 years old. You might have the same credit score. You might be applying for the same loan amount. But there are different elements and nuances and things throughout the application that differentiate you from the other person. A loan application is like a thumbprint. I'm telling you, we've been saying this for a long, long time. This is why lenders and realtors say, stop asking your friends and family for their business about how did you get approved? I hate when these influencers with a million person following say, hey, this is what happened. This is what you can do too, because it just is not. Okay. So what's your residential history for 2 years? What is your job history for 2 years? What is your current income? What are your current assets? What types of assets do you have? Checking, savings, money market, CDs, mutual funds, IRAs, 401k, stocks, restricted stock units. These are important, like they're literal line items. How are you going to handle your down payment? Is it going to be down payment assistance? Is it coming from your checking and savings account? Is it coming from a 401k? Is it going to be... Please try again. My phone. Is it going to be a gift? Everything that you check and you indicate on the loan application matters. It matters a lot. So again, if you hear nothing else that I say, the automated underwriting system reads your entire loan application. It reads your entire credit report and it extracts information. It looks for patterns. As I stated a little bit earlier, Fannie Mae and Freddie Mac, they handle maybe probably 80-90% of the loans that we have in this country. And when I say handle, I mean we get their guidelines. Because what happens with most loans, not all, they have to be sold to the secondary market. So if y'all ever remember what happened like in 2008, if you ever saw The Big Short, the reason why our millennial generation thinks when you hear the word recession, oh, that means that the housing market is going to collapse. It actually was the other way around. In America, the way the housing market is built is we take, so like, let's say I am the bank, okay? I'm writing here's 400,000, here's 400,000. I'm going to eventually run out of money. So we have a cycle in place that allows me to sell your loan to the secondary market. And that secondary market is tied to a lot of other different financial investments in the country, right? So it helps everybody make money. And that could be insurance. It could be a lot of different things. Okay. So when that system failed and people weren't able to make their payments, everything else that was tied to all of those mortgages that weren't making payments, they all failed too. And that's how we ended up with the whole collapse. Okay. The whole economy collapsed because people weren't making their mortgage payments. Okay. So in this case, sorry about that. So in this case, whenever we're running everything through the automated underwriting system, it has to consider the fact that we are selling this loan off to the secondary market, and it has to check all the boxes to be able to be sold. Because if that loan is not a sellable loan, meaning if for some reason the underwriter is like going to be like, I'm going to get this loan to them anyway, and it don't check all the boxes, and it can't get through all the compliance and the post quality control and quality, quality assurance. We got QC, QA. We got a lot of people, a lot of controls in place to make sure that nobody's doing nothing nefarious. Okay. And so if for whatever reason we try to sell it off to the secondary market and we can't, then that means that that lender is stuck with that loan. So again, it has nothing to do with how you look or your personality. It has everything to do with making money and helping to continue that flow and that cycle of making money. So the automated underwriting system looks like this. Whenever I run it through, it looks, where is it? Do I have it? Is this it? Okay, just kidding. Maybe I don't have it. I thought I did. Is this it? Nope. Okay. So I thought I had it pulled up, but it basically just says if you're approved or not. That's all. And it has a ton of other pieces of data. And so I'm not going to show it to you, but I'm looking at one right now. It tells us if you are approved, eligible. The automated underwriting system, it reads everything. It says, what is your debt to income ratio? What's your housing expense ratio? Okay. If that's too high, you're not buying that house. If your whole debt ratio is too high, you're not buying that house. It's looking at the interest rate. It's looking at the loan type. Is it a 30-year, 20-year, 15-year? Is it a fixed rate? Is it an adjustable rate? What type of loan is it? Then it goes into the findings and it explicitly tells us this person is a bad risk because, and it begins to itemize the reason why that individual is not a good credit risk. If it's something that we can work around, great. If it's not, great. Sometimes we can and then sometimes we cannot. It looks at your credit and your liabilities. It literally looks at each individual account. Sometimes it'll say, hey, this person got charge off. This person has collections. This needs to be paid off. That can't be paid off. Factor in 5% as a minimum payment for this type of debt. Oh, they're not making any payments on their student loans. Then you need to create a payment for that. There's a lot of things. It looks at employment and income. Sometimes those reports can be, in this report that I'm looking at here, how many pages is this? 13 pages, 14 pages of information that the underwriter has to go through to make sure that they check all the boxes to make sure that you actually can apply and actually be approved for a loan. What's going on out here, trucking? How you doing, honey? Oh, Mark, thank you so much. Let's see. I'm good out here. This is a little bit boring, but I just wanted to put some perspective on things when people are like, the bank is being so racist. The race is the common denominator sometimes, but that's not the causation of certain things. So, I wanted to give you an example, right? So, if you are applying for a home loan, and again, I'm gonna still pick on Mr. CKB. If he has a 660 FICO score, and there's another applicant with a 660 FICO score, and they are both applying for a loan that, I'm using some real person right now, $320,000. The sales price is $320,000. And they both putting down 30%. If for some reason the credit profile is saying, well, dang, in the past, when we had the 660 with the 320,000, no, that's not a good example. 300, I'm gonna change it slightly. The $320,000 purchase price, and the person only put down 3%, it didn't go so well. It didn't work out well. So that might mean that Joy, me, instead of me getting an approved eligible, I now get maybe an approved ineligible. Because that 660 FICO score that Mr. CKB has may have been a collection. Okay. It might have been because of a $1,000 medical debt that just popped up 3 months ago. Because I swear that's how it always happens, y'all. The other person, same everything, right? Same purchase price, same down payment, same loan program, same credit score. That's 660. They might have had a 660 because they missed a mortgage payment. Because they recently had a 60-day late on something that, of course, they're going to swear up and down they didn't know about. A collection is weighed totally differently than a 30-day or a 60-day late. Totally differently. Completely different things that the news cannot and will not ever tell you about because that information is not known publicly. We don't disclose that information. But y'all have to understand that there are many variables within variables. And the story behind the loan application makes a difference. So, unfortunately, I don't know the answer to what I'm about to say, but I'm going to say this. Earlier, I mentioned that I worked at a bank and I've worked at non-banks. And that's important in this conversation because Navy Federal is a bank. Banks are not there to do home loans. They are there to take your deposits and reinvest them so that the bank can make more money. They always try to sit. If you think about it, you get stuff in the mail every single month and they're like, oh, this high yield savings account or get this credit card or that's what they're there for. They are there to take the money that you have at their bank and reinvest it, just like I just explained about how mortgages work when they sell it out to the secondary market. Same thing. Banks are there to take your money and make money. Not make money for you, though. They make money for them. And so because the FDIC and all of the different regulatory bodies say, you know what, you can't just be having people money. You need to offer different loan products. And one of the different products happens to be mortgage. So after they have so many deposits on file, they must extend home loans as an option. So they're not there for that. And because that is not their primary source of what they're there for, they reserve the right to be more conservative. And earlier I said that the guidelines are public information and you can have these thousands and thousands of pages of if, then, what happens, when, why, what, where. You got child support. Oh, well, if the child support had been paid in 3 months, do this. If it's not if it's not a formal agreement, then do that. It's literally like a dot. It changes every element. Oh, they're hourly wage earner, then times it by this. If not, then do that. It's spelled out for each individual, every single unique situation. And so if for whatever reason, the lender, ABC Bank, I don't know if it was the situation with Navy Federal. I'm reluctant to say because I'm not privy to that information and I don't want to overly speculate. But I know from past loans that I've done, they have overlays. And an overlay is a rule. Your minimum credit score for FHA loan is a 580, which is in the guide that I just told you about. And I'm going to, as a lender, put another rule on top of it because I want to minimize the risk that I'm taking on because I ain't got to take on all that risk. For what? I'm only doing this because I have to. Okay. So that's why you can have two people with what you think is the same exact credit profile not be able to qualify because they have an overlay, a rule on top of a rule. And they reserve the right to do that. It has nothing to do with your race. It has nothing to do with anything. They just don't want to do it. They don't feel like it. You may end up in a situation where you apply for a loan and for a home loan, and instead of getting an approved eligible, we get something called a refer. So let me see if I can share this with you. So there are different categories of approval. So with those different categories of approvals, you might get an approved eligible. You might get, oh, that's what it looked like. That's what I was looking for. Y'all see this here? So this is what my screen looks like. Whenever I run it through the automated underwriting system, it'll tell me if somebody is approved or not, approved eligible. And it tells me all the people that's on the loan, all that jazz, right? So in this case, you got three findings. You could get an approved eligible, a refer eligible, or a refer with caution. There are some lenders that if you don't get this one right here, ball game is over because they don't offer what's called a manual underwrite. They don't have to manual underwrite. Okay. That means that you have to meet an even more strict criteria to be able to get the loan because something wrong with you. Clearly something wrong if you couldn't get approved the regular way. So there's opportunities that still exist for you to still get approved, but every lender does not have to offer that. They are not required to. And the banks that I used to work for, they ain't do it. They was like, oh no, you gotta let them go. Cut them. Bye. And they can go down the street, go to another lender, and the lender be like, okay, yeah, we'll do it. So those are the things that you all don't know anything about. I was on TikTok the other day and I made a recommendation and I'm going to do a video. Actually, I think I recorded it already. I just haven't uploaded it. And I said, I believe that if you would like to be approved for a home loan in 2024, my recommendation, which is not required, this is just me based on my background experience and what I know is coming and what I see with the economic the economic data that I've been presented. We all know that the climate is shifting. We all know that interest rates are coming down because they want to stimulate the economy sometime next year because people are going to be laid off from work and so on and so forth. This is a $4 trillion industry. Y'all think they don't know these things? Like, it's not a clown show. They have data on top of data. And so in this situation, what would need to happen is you just not going to be able to just do whatever you want. You can't do it. I would say have a 640 FICO score. I would say save $20,000. That's what I said. And I also said that, increase your income and decrease your debt, which isn't really relevant to what I'm talking about at this very moment. As credit tightens, that means they're getting the pool of people that they're giving loans to is going to get smaller and smaller and smaller because they want to mitigate risk. Why would I know that it's getting ready to be a bunch of layoffs and I just give you $400,000? You could have gotten that $400,000 2 years ago because the money was free flowing and there was no problems on the horizon at all. But times they're changing. You gotta consider all of these elements, and the normal person does not. And it's okay. I'm not saying that you should. I'm just saying that these are the processes and the thinking that mortgage lenders, banks go through when it comes to mitigating risk. Why am I going to give out more money than I think I'm going to get back? It's not logical. You're not going to be able to be a profitable business doing that. And if we're giving out money for houses and people are not paying that money back, it could cause another problem. And I just explained earlier that it could cause the entire system to collapse, which is why I keep saying over and over, we will never, ever again have a housing crisis like we did last time. It'll never happen because of the implications for all the other parts of the economy. So I think I covered everything that I wanted to cover. There's overlays. Every bank is different. So that's why the man said, oh, I just went and I got a loan with so-and-so. They said that he had quote unquote excessive debt obligations. That means his debt to income ratio was a lot. Let me say this. A part of the article, if y'all Google the article, it says that they lended more often to a white consumer, a white applicant with a $62,000 or less income versus a black applicant that had, I think, $140,000 or more in income. Now, again, as a layman on its face, you thinking $140,000. I can't believe they would get declined for a loan. Yeah, I get people with six-figure incomes. They ask for down payment assistance all the damn time. It is in the American DNA to spend a little bit more than what you make. That's how we roll. It's what we do. It's the American way. So just because y'all see that, again, on his face, it looks like, oh my God, clutching my pearls. But it's a lot of elements and things that we do not know. Y'all don't know that man. He said he was a CEO. And so what? What that mean? His debt ratio could have been, I'm making this up. I have no idea because I don't know that man, but I'm just making it up. On a conventional loan, you're supposed to be able to go up to a 50% debt to income ratio. His situation could have been he was buying too much house. And he could have had a housing ratio of 46%, 47%. I don't know, because I think he said he didn't have a whole lot of debt. But the house could have been too much debt for him. And they were not willing to risk going that far. And that's okay. The systems are built with past outcomes in mind. Those systems, that data that is collected is refined and dialed in some more and studied. And they know what a performing loan looks like. They're looking at the last 2 years of your life to predict what the next 3 years are going to look like. Are you going to continue to earn this much money? Are you a person that look like your credit super shaky and that if the economy sneeze, you gonna get COVID? Okay. Are you gonna get some sort of illness, credit illness, that you're not gonna be able to recover from? Because if you got a 660 FICO score, we know you already little, But that same person could make less and have an 800 credit score. Well, they done found a way, so it's all good. That other person might have 2 applicants and you only got 1. So that other applicant might have some income there that they like, okay, well, it's cool because if something happened with this person, then they might be able to step in and make the payment. It's so many variations. No 2 loans are alike. That's all I want you to take away. No 2 people are alike. No 2 loans are alike. The variables are very different. Down payments make a difference. I have been seeing most recently what I have noticed is with FHA. Well, I didn't notice, but I'm on the government loan production subcommittee for the entire United States of America. And in that subcommittee, we have a message board, and someone posted a message last week and she was saying, can I find it right quick? Hang on. I might be able to tell you exactly what the message said. Yeah. She says, good morning. She was talking to somebody. She said, hey, yeah, I experienced this too on a file in process. The assets changed from savings to a gift. So that meant that the person obviously didn't have no money. But gifts are allowed. There's nothing wrong with that. The debt ratio actually went down 0.36%, but it went from an approved eligible to a refer, meaning you went from being able to get the money to not being able to get the money because the assets didn't belong to you. So that's why I say, have the $20,000. Have more money than you need. Stop chasing behind people that's going to tell you the answer that you want to hear. And please listen to me because I'm going to give you the answer that you need to hear. You don't want to be able to apply for a loan. You want to be able to be approved for the loan. And that, she said, oh yeah, me too. People in my office have been complaining about that lately. Well, God, some of the loans I used to just be able to get a yes. They're like, I can't do it. It's tightening up. And it's okay. It's risk. It has nothing to do with, oh, so you saying all Black people are risky? Hey, if that's your takeaway, then that's fine. I'm okay with that. I'm not here to argue. I'm here to present some additional information to help you be able to make better opinions that are more informed and not biased. Because again, the news is there for clicks and headlines. I majored in journalism. I worked in a newsroom. I swear to you, you ain't never, ever gonna hear me say something that I can't tell you I have done, or I can't point you to where I got the information from. It is never gonna happen. And if it does, I'm going to say to you, okay, I'm making this up. I'm not really sure. We used to have a saying, if it bleeds, it leads. They are there to sell headlines. So, are the banks racist? That's a determination for you to make. I can't tell you what to think. That's not my call. But I would strongly suggest that you just flush it out just a little bit and say, okay, what else could it be? Just because they say they were exactly identical, okay, well, what could some of the narratives be behind the credit scores that make it different? I've literally seen people with 700 credit scores that had bankruptcies because they started at 800. Oh, they got a 700 credit score and they can't get a loan. They had a bankruptcy 6 months ago. It's possible. But again, you don't necessarily know that. What is this? Will I reapply for Maryland? I don't chat. Oh, hey. I don't know. Don't get me started lying. I'll let you know. I'll see. Can you inbox me and I'll share some stuff with you. We'll talk about it. I don't know. Mr. CKB, thank you for your question. You said, so what are my thoughts on the various news reports about banks that either outright refusing or underfunding Black applicants as they do white applicants? These applicants were actors. Again, I don't know all of the nuances. That's literally my point. There is no way for anybody to speculate on anything if they don't have all of the variables. It can sound one way on its face, but that doesn't necessarily make it true. There is a 0% chance that I would be able to answer something like that. And the news even said, like, we ain't saying that that's what's happening because we can't prove it. There's no way to tell. There's no way to tell. And again, if you think for 1 minute that all that fraud that they was pushing through there for these last 3 years went unnoticed, you're crazy. Somebody on TikTok's comment was something like, well, credit cards don't have nothing to do with mortgages. Okay, girl. As I stated at the very beginning of this, I'm not here to change your mind. I'm here to have a much more in-depth conversation that does require emotional maturity, an emotional intelligence, and quite frankly, some intellectual, a certain level of intellectual capacity to be able to wrap your head around certain concepts. This is one of the more serious things. I'm never going to say that there is not certain patterns that could say, oh, well, it's because they Black or whatever. But I can tell you from my own personal experiences that I've had 2 Hispanic gentlemen that applied for loans for me. They were both self-employed and they went through with flying colors. I have not been able to pre-approve one single self-employed person in a couple of years. I can't even I can't even remember when. And that has everything to do with being properly prepared. And unfortunately, as I stated earlier, when you're given 2 roads, here is the right way. This is going to take a little longer. Here is the wrong way. They like, well, I'm going to try this first. Okay. I say, hey, save $20,000. I ain't saving it. Okay. And you don't have to. It's not required. It's not a requirement at all. And I'm not saying that it's a requirement. I was making a recommendation just based on what I know. I don't need no 640 credit score. I can apply with a 620. I can apply with a 580. Yeah, and less than 1% of loans in this country get approved with a 580 credit score. So you keep on believing what them people telling you. But apply. I will take someone's application, even if they want to apply and they got a 400 FICO score, I will send them the link for the application and I will treat them just like everybody else. If you want to go through a loan consult, let's do it. We can't refuse your applications. But again, people are out here searching for a key to an unlocked door. If somebody is explicitly telling you how to do something, do it. But I digress. So it's been an hour. And I really hope, can y'all tell me if this was helpful or not? Just give me a little bit of feedback because I might do it on TikTok a little bit later because the TikTok people, honey, they over there. It's a house divided. Let me see what they do. It is a house divided over there. They like, girl, why you shouldn't? I told you that girl, she said, oh, you a pick me. That's fine. I'm okay with that. And you told me everything I need to know about you. The only reason why you mad is because you don't qualify. But I ain't gonna say. But we gonna keep it PG. We're not gonna be rude or nothing like that. All right. So y'all don't have no questions, comments, concerns. Oh, well, it was helpful. Thank you for the educated stance. You're more than welcome. Thank you. You seen it. You saw it. What they saying over here? Okay, we had almost 12,000 views, but yeah, so I'll go back over there and pal around in the comments, and hopefully people will I'll be able to respond to some of the conversations that they're having. But my goal is not to change your mind. Whatever life experiences that you have had or perceived life experiences that you think you may have had, they're yours. And nobody can take your feelings away from you. But I always say feelings are not facts. And what we do is math. It's data-driven math. That's all it is. I don't care what the new math say that, 2 + 2 still equal 4 over here. So all those plays that people were running and stealing the credit cards, those credit cards are coming up as unpaid now on these applications, and people trying to go to the credit repair to get them, expunged. And this isn't good. This is not good at all. Oh, and last thing, I gotta say this, and I wish I would have said it a little bit earlier. The only reason why the news and the CFPB knows the information about the racial makeup of the approvals, applications, and denials. Well, I'm gonna say two things. One is called because of HMDA, and it is a disclosure act that basically says, as a lender, we have to ask you what your race, your ethnicity, and your gender is. That data is not a part of why you get the loan, but unfortunately, I can tell you this: a lot of Black people thinking that they're like, I ain't gonna tell you that. I do not wish to give that information. That's fine. It's totally your right. It's a box where we could check that you didn't wish to give that information. But spoiler alert, because again, I told you it's like a $4 trillion business. We know there's many different ways to triangulate information to figure out what the race of a person is, your surname, your current residential address, where you're moving to. We all have different patterns, but if you put 100 different people, you're going to start to see a picture of things take shape. And we just do things. Some of us do things the same way, and you can start categorizing it as that, or, whatever. If I start talking about blind microlinks in 2023, you think I'm talking about a Black girl. 10, 15 years ago, we'd have been talking about a white woman. Because again, it's patterns of behaviors over time. Data says that that's who's getting the blind microlinks now, is us. Tape-ins, us. That's been around a long time ago. Ain't nothing new about it. It's just new to us. And so that's one thing that I want you all to know. When you all are filling out these applications, you do need to indicate your race and your ethnicity, because it is there specifically for this. There was a bank this time last year, that went on. Well, I don't even know. They didn't even announce this. The media picked it up. I think they must have sent out a press release or something. And the media caught this story, and they plastered everywhere that there was a loan for Black people. It was a loan explicitly for minorities, and this loan wasn't going to look at your credit, and this loan wasn't going to look at your what was it? It wasn't looking at the credit score. It was going to be like no mortgage insurance. It was going to be this magic loan. And I had to tell people, one, nobody's coming. No one's coming. Whenever you see stuff like that, please know nobody's coming to rescue anybody. It's going to be on you to abide by whatever the guidelines are and rescue yourself. Are there supplemental things that are in place to help? Absolutely. We can get some down payment assistance. There are some grants. There are some special purpose credit programs that are out now that can help. Absolutely. 100%. But there's not going to be this fairy dust that somebody's going to point to you and say, hey, you. And then now all of a sudden you haven't done anything to improve your situation and you're just going to get $400,000 just raining on your head. But that data is very important, because when I looked at when I heard that program, I kind of giggled to myself and I looked at the calendar and I realized we were headed into the fourth quarter. And I know, because I do this, that HMDA data, they have to submit it and they're going to look at it to make sure that a lender is not taking applications from a particular group of people. They're looking to make sure that it's a proportional amount. I said this like last year on Instagram. It's almost like if I open up a corner store, and I open up a corner store in a neighborhood that's 70% white. In theory, my client base or my clientele would be 70% white. It would reflect that. And so that HMDA data is gathered to make sure that we are, in fact, serving everybody. Now, that clientele that I just talked about, that corner store, you would hope that 70% of people would walk in. Ain't nobody said that 70% of people had to be able to buy anything. Catch that tea, okay? It's all about applications. And sometimes you do see these things where they just need to get the applications up and they get them and they go. Because I haven't heard a single solitary person have a success story from that bank. Not one. I told y'all. Y'all don't want to hear me. But yeah, fill out the HMDA data. It is important. One, we already gonna know the answer. And then two, is there because it helps to expose any type of practices that are considered to be promoting racial disparities and discrimination. So thank y'all so much for your time. It's been an hour. I'm hungry now. So I guess I'll see y'all a little bit later. So make sure you like, comment, subscribe, all that jazz. Because I'm like this close to getting monetized. So thank y'all for kicking it with me. I'll see y'all later.